You finished school and you're a few weeks into residency. It's pretty awesome to be at this point now where you're actually getting to practice what you've been going to school for so long. But the problem is that while you're making some money as a resident, you're not even making close to the amount of money you will as staff once you finish residency. That makes it tough to pay back all that student loan debt. So what's a resident to do when you want to stay on top of your student loan debt and set yourself up for success with your student loans after you graduate residency? Today's video is all about what you can do to set yourself up for financial success with your student loans after residency. Stay tuned. The first thing you need to do is get started. Getting started means acknowledging the basics of your debt. So answer these 3 questions and then we'll move on. The first question is, what type of student loans do you have? Are they federal, are they private, or are they a mix of both? The second question is, how much student loan debt do you owe? The third question is, are you a resident at a government or nonprofit institution, such as a 501c3 hospital or a VA health system? Let's talk through option 1, which is Public Service Loan Forgiveness, or PSLF. Now, this option is going to be good for borrowers that have high amounts of federal debt and are working at a government or nonprofit institution. PSLF is a pretty common choice because it forgives the remaining balance of federal student loan debt after a borrower has made 120 eligible payments while working full-time for an eligible employer. If this is the route you're planning to go, here's the most efficient way to get it done. The first thing you want to do is consolidate all your federal loans into a direct consolidation loan right now. The reason you want to do this now is because if you wait and do this later, you'll cancel out any eligible payments you've already made. That means if you do it 1 year after starting residency and you made 10 eligible payments, all 10 of those eligible payments disappear and you have to start over with your 120. The other reason you want to do this is because it allows you to start making eligible payments as soon as that loan is consolidated. If you don't do this, you have to wait 6 months after graduation, once the grace period is over, to start making eligible payments. Now, that may not seem like a big deal, but remember, as a resident, you're going to be making the lowest salary that you probably will in your entire career. Those income-driven payments are going to be super low compared to what you'll be paying as staff. If you can get 4 or so extra payments in, instead of waiting that 6-month grace period, you could save yourself thousands of dollars and get loan forgiveness 4 months earlier. The next step is to enroll in an income-driven repayment plan of your choice. If you qualify for the Payee plan, that's generally the best option because it's 10% of your discretionary income and it's capped at no more than the 10-year standard monthly payment. The third step is to start making the payments as soon as your loan is consolidated. The second option you have is income-driven repayment and not choosing to pursue loan forgiveness. Maybe you've decided loan forgiveness isn't for you because you either don't have that much federal student loan debt, or you have a lot of private student loan debt, or you only have private student loan debt, or maybe you've decided you don't want to rely on a plan that Congress can simply vote away. Whatever the reason is, you're not planning to use loan forgiveness. The first thing you want to do is avoid entering forbearance. So as a resident, you will technically qualify for forbearance, which means you won't have to make any payments on your student loans. The problem with forbearance is that all of your loans, including your subsidized loans, will be accruing interest the entire time. That interest costs thousands of dollars a year. So ideally, you don't want to be in the situation where you're not paying anything toward your student loans, and that's just adding up. For most residents, your best bet is going to still be to enroll in an income-driven repayment plan. By being in an income-driven repayment plan, you can still have a low required monthly payment, and if you feel like or can afford to make extra payments, you can still do that to pay down your debt more quickly. But the nice thing is you don't have that pressure of a higher monthly payment in case an emergency comes up. When you're fresh out of college, it's tough to have all the financial things in order, like a huge emergency fund or a huge amount of cash flow. So it can be nice to have a lower required monthly payment. If you have private student loans, your options might look different. You'll want to talk directly to the servicer of your private student loans. You'll need to give them a call and see what options they offer for repayment during residency. They may try and push you toward forbearance because they don't have income-driven repayment options. If that's the case, ask if you can still make payments while you're in forbearance. Typically, the answer is yes. This allows you to make monthly payments, even though they're not required, to help keep up with that interest rather than just letting it accumulate. What about when you're almost finished with residency? If you're not considering loan forgiveness, you're about to enter a really good place for refinancing. Refinancing companies love borrowers with high incomes, reliable jobs, and a good amount of debt to pay back too. Why? Because borrowers like this are super stable and help them guarantee they get that return on their investment. If you're interested in refinancing, I'll link up a post below about what refinancing can look like during residency. It's specifically about pharmacy residents, but it can be applied to medical residents as well. Are you a resident trying to figure out what to do with your student loans? Leave me a comment below or send me an email. I'm jenny@repayable.org. Having been a resident myself, I'm happy to help other young professionals just getting started navigate this student loan debt stuff. I want other young professionals to start off strong on their student loan repayment journey. I hope you guys enjoyed this video. If you did, please give me a like and hit that subscribe button below. There's a new video every Wednesday. We'll see you guys next week. Bye!